Hello, everybody. Looks like the market is heading south. A whole lot of stocks are taking a huge beating. As you can see, the S&P 500 has dropped further from yesterday's low. It's hard to say where it's going to find support because there is just no support all the way up till 33590. Could it fall all the way until here? It's definitely possible because I don't see any sort of a support coming in before those levels. In terms of the fear and greed within the markets, we're looking at the My Social Pulse trifactor scanners, and let's look at SPY. So as we can see, there is the fear and the greed is converging, meaning whenever we see the fear and greed converging, we know that, and if the price is bottomed and the price is moving downwards, it's possibly a really good time to buy in to the markets. And here is one of those indicators where we can see that the price is, the fear and the greed is converging and the price is heading low. Other times when we have seen price converging and then the price moving up is, as you can see here, the price, the fear and the greed converge, and then the price moves up a little bit. And then again, you see there's a drop. And again, you can see the fear and the greed, come close to each other. So there's a divergence and a convergence, and there's a lot of fear in the market. And as some wise investors would say, invest when there is fear. But again, it's you, as much as you cannot time your investment, you should definitely look to do some sort of dollar cost averaging if you are on SPY or any of the technology stocks. If you were to look at the overall, it's at one of those very interesting levels. You look at an overall, long-term just let's say 3 months, 6 months, or year to date. So these are all at lows, which is, it's definitely possible. These are really interesting points to get into. So let's just go back and look at the technical analysis in My Social Pulse, and you can see the price is dropping drastically. Let's go back and look at a 1 month, and you're looking back from the last from 2000 onwards, and as you can see, it's not looking great. Actually, it's there could be quite a bit of correction before things stabilize, unless of course a whole lot of positivity comes into the market. So it might find stability here because as you can see, the last time around there was a lot of pressure around this area in terms of trying to push through and move out of that zone, so that you could find some sort of resistance. But if it does not hold it, I can see it definitely coming down all the way up till here. So that is 35935 for the S&P 500. Let's look at some of the how things are playing out in the in social media. So in terms of the hot stocks, let's look at social media to identify stocks that are being discussed today. Again, we're still seeing most of the conversations are around AMC and Apple. Apple has a very short, very small, short road. It's very interesting that it's being discussed on social media. I just want to look at the charts. And And within the charts, again, let's look at a more live Apple. Let me look for Apple. AAPL. There we go. And yes, it's still, heading down south. It's quite. Look at this downtrend. It's been a really long correction all the way from April, and it still doesn't seem to have found any sort of support. And if you were to go back and look at some news on the scanners, let's see if, okay, Apple has got some positive news, and it has possibly got to do with the Berkshire. Yeah, so it's Warren Buffett's portfolio stock. So that's the reason mainly why there is positive news. Having said that, everything is taking a beating today with all the indexes going south. Right, so let's see if anything has changed between pre-market and since the market is open, if any of the scanners are showing us anything different. And also, let's just have a quick look at what the overall sentiment is today for some of these stocks. So we're looking at social media as we speak. SPY, a huge amount of negativity coming in, as you can see, huge amount of negativity, and positivity is just still over more than the negativity, but this is not your usual. This is not how the usual positive and negative looks. It's way a bit more than what we would normally see on a regular day. And in terms of conversations on social media, as you can see, put is a huge keyword that's coming through. So let's have a look and see what are the conversations on social media. So green on the day, but mad that I called SPY 393 all day and didn't take put. Caps are filled now. Next week should be interesting. Well, these puts printed earlier than I expected. That's great. So there's a lot of news about people going short on the market, and they've had some amazing gains, and those are the conversations that are happening on social media. This is a tweet by Uber Ape, and what else? So let's look at. There you go. The past 2 days was the ultimate bull trap. Very interesting. I love the meme there. So I was hoping to see a chart, but I should have known better. Well, anyway, so that's how the markets are looking. A whole lot of negativity, and all the other stocks that have been discussed along with SPY is the QQQ, as you can see here. There's QQQs that is being discussed. Tesla, yes, Apple, VIX. Yes, I'll be very keen to see what other conversations that are happening around VIX, because it's a very good indicator of where the heading. So stock market bubble edition, so recession. So these are the hashtags that are kind of prevalent on Twitter now. It's very interesting. We talked about Tuesday's rally in comparison between the VIX, EXP, and April's width options insights. We don't see a full 4% beat down today, but with names like STGT down 25%, traders have recession vibes into interest rate increase. Oh, wow. Okay. Yeah. I mean, 25% down is huge. I mean, that is worrying signs. Just let's look at the charts again quickly. So I'm just going to add TGT and TGT, TGT. There we go. I'm going to add that to my scanners and save it. And quickly look at it. So TGT. Well, on the day, it's not done too badly. Let's look at the last 1 hour. Oh, gosh, that's crazy. It's just dropped 25%. Fair enough. I mean, it's huge. I mean, when the stock drops like that, it is definitely worrying signs. I understand Target and the other discounts store stocks are doing very badly because of the war and the cost of energy going up. But this is huge. This is huge. And I would watch this. It's going to take a while before it recovers. So just to put this into perspective, the last time it gapped up, it stayed up there for a really long time. And now it's gapped down. And this could mean quite a bit of resistance or, downward pressure in the short term. But again, as some of these wise investors would say, buy when the market's fearful and sell when the markets are greedy. And if we were to look at, let's look at the fear and greed index on my social pulse for TGT. And not yet. I'll probably wait for the scanners to come through and we can look at it. It's still not showing any signs of an entry point as I see it. So let's wait for it. So looking at the news and fundamentals is exceptionally, except large amounts of negative news. US stocks choppy hours before opening bell. Target lowers to release earnings. And it might be a case that the earnings are not good enough, and that's why the market is already expecting, the results not to be too good. And this is like a pattern. We've already seen this play out. We've known that Walmart has downgraded its forecasts, and also they have reported not so great earnings this quarter, and that is surely going to kind of play out in the other companies within the same industry. Again, a discount store. So nothing that stands out on the hot stock scanners. Again, the usual suspects you're seeing: Hood, Roadblocks, GME, Apple, and then AMC. Penny stock scanners. Let's quickly have a look at the penny stock scanner. Again, AMC, GME, FULC, COS, and Hood. Hood has got about 10% short float. COS has about 15% short float. Quickly go and look at the sentiment scanners. Okay, we've got Target with the. It's so quickly changed, as you can see. Just an hour ago, when we were looking at it, these scanners were very different from what we're seeing now. Okay, there we go. Targets profit halves on rising cost, warning of bigger margin hit. Now that's exception. That's very, very worrying. And given that there's already a lot of talk about a recession, this sort of news is never good. Reds in the next few days if this continues. It's just sort of continues with the earnings, um, and well, by definition, I think if we have a 20% drop, it could mean that we might enter recession. So let's wait and watch how this whole thing plays out. Let's look at targets. Yeah, so that's the target price charts. As you can see, it's just gapped down straight and dropped 25%. That's huge. It's huge. If we were to kind of look at this, that's a lot of ground to cover in a short time. I mean, I wouldn't be surprised if it kind of, goes all the way down here, because there's no support per se at these levels. So you could see the price drop all the way to 129 or so if it doesn't stabilize in these around these levels. And given that the forecasts are also not looking very great, no reason why these we should see any positive news. I mean, anything positive at this point in time. But is it a good time? Dollar cost average, buying, of course. But again, you don't put all your money in it. You've got to buy as much as you can afford to lose, for sure. And then again, the key is to dollar cost average. As I've not picked up anything new, that's fine. So as you can see, the last time there was a whole lot of fear. If people would have bought the market then, whilst there was a slight dip again, then again, you can see that the market went up from from when the convergence happened. So similarly, I'll be looking for a sort of convergence of the fear and greed tomorrow, and it will be interesting to see if it holds or it drops further from there. Back in a minute, just give me a second. So let's go back and look at the charts again quickly, just to see where they are. I'm very keen on looking at SPY. So let's bring SPY out here. And again, when you zoom out, there is no support whatsoever at these levels. So we could see, a further downside, at least until here, I suppose. Here we go. As you can see, the last time round, when the markets were this choppy, it found support around these levels, and then it moved up from there on. So it could be something similar. You could see a slight pullback, and then again a sharp correction that could definitely happen. It really depends on how the situation improves, because the consumer goods is having taken a huge impact because of the increase in petrol prices because of what's happening, geopolitically. So I'm just going back to the negative stock news and seeing if I can find any new. Okay, Netflix is still there, and low again, now low, and Target announced your results today, and both of them are within the space where they need a lot of gas and oil. They do a lot of transportation of material, and it's possibly had a knock-on impact on their bottom lines. So very, very similar industries. So low sales disappoint, at least spring hurts seasonal demand. Yeah. Well, it looks like the DIY home projects have not have kind of slowed down, given that we've gone off the of the lockdown and people are out there carrying out business as usual, and that this has had an impact on low. So it's seen first quarter FY22 sales decline of 3% year on year to 23 billion, marginally missing the consensus of 23.76 billion. Well, the sales, it doesn't look like a huge number, but it's still worrying signs, because things are changing, and if it's not changing for the better, then it does definitely have an impact on the price. Okay, so Lowe's has actually blamed the unusually cold temperature for lower than expected sales. But I guess there's more to it than just the temperature. It's possible that business as usual and people out of lockdown could mean that the sales, it has a direct impact on the sales, whereby the sales, the projections, and also the results are not very promising. The quarterly results are not very promising. Twitter, Walmart, McDonald's, we've already looked at it. So again, all of these stocks have been impacted by the war. McDonald's has shut most of its stores in Russia, and that's had a direct knock-on impact on McDonald's, and that will have an impact on the sales for sure. And Wells Fargo is again in the red because Berkshire Hathaway has offloaded Wells Fargo shares and added Chevron and what else? Chevron and Citigroup to their portfolio. Again, let's just go back and look at what's happening within the market. Again, there's a little bit of respite where it's trying to stabilize, but it's huge volumes. It's coming in there. So there's very little positive news, and I can see a lot of, I can see that a lot of institutional investors might be looking to start buying in at these levels and probably average down, and that would be definitely a really wise decision, because these are the times to buy, not when it's going up like this. You buy your dollar cost average to a point, and then you hold for the next few months, and some people could be great at day trading, but I mean, some of the wisest investors have been the ones who have just held on to it for years on end and buying in at the right time. But of course, you cannot time the market. But the best you can do is dollar cost average in at these sort of levels and buy as it drops, and don't buy too much all at once, just enough so you can keep buying more if that's your strategy. Let's just quickly look at the hot crypto scanner. So this is looking at social media, and these are all the conversations that are happening within social media. Again, I can see why Luna is here. Luna is here because of all the negative press. And then you have Ethereum, BTC, has had a lot of positive news, and NFTs are generally are probably being discussed all the time, every time, everywhere, and that's why it's here. And USDT is clearly because of the Luna situation. There are discussions over here. ZIL is again. So this is interesting. Let's see what happens. Great. I hope that was helpful. I just needed to come in and, get this video out here because I saw the markets plunging, and felt like I had to just analyze it and give my view of the market and what I think about it. As I said, it's always great to buy when everybody's fearful, and that's what our indicators are showing. Having said that, you don't just go in and buy everything and putting all your money into it. You've got to be sensible about it. You've got to, first of all, put in only what you can afford to lose, and then secondly, buy small chunks over a period of time, because there's a lot of time to buy, and given that the market is not going anytime, going up anytime soon. So there's still opportunities to buy. So always try and get the best deal possible in these sorts of markets. Great. Thank you so much. I'll come back online tomorrow. And head over to my social pulse if you would like to download the scanners and use it yourself. Have a great day. Happy investing. Bye.